Good morning, everybody. This is August the 29th, a Monday, 2022, and we're going to talk about big tech stocks today. They are driving the stock market, but the stories are changing, and we need to stay updated on the value of their stories inside the market cap index of the S&P 500. So first off, disclosures. The views of myself, John Blank, PhD, are not necessarily the views of Zacks Investment Research, and past performance is no guarantee of future results. We go through this every time. Do it again. So, like I said, today we'll go through a deep dive into the 5 biggest U.S. tech stocks. I have 3 sections. I'm not sure I'll get through them all, but I'll try. Part 1 is a first look into the core stories of the 5 major tech stocks. Part 2 is lots of quantitative shareholder metrics. Part 3 is the big tech narratives. You're definitely going to need these slides later on. We've got a lot of them. There's a lot of information here, because this is a stock story, not a macro story. So we've got lots of detail from Zacks Professional Services at Zacks Pro. So first off, let's get into a look at the core stories of the 5 big tech stocks. Remember, the S&P 500 is a market cap weighted index, not equal weighted. So these make up something like 20 to 25% of the index when you include Berkshire Hathaway holdings. So this is a very important motivation for all of us. If without the support of these big stocks, the market is not going higher. So let's take a look at what's going on. Number 1, price consensus EPS surprise charts over the last 5 years. This is always your first stop. I want to point out this is Microsoft and Apple, Microsoft, Apple, then Amazon, Meta, and Google. I will be doing this section in this order always because I think this is most helpful. Let's point out, first of all, Microsoft and Apple share prices and EPS consensus are both holding up best. That is your first insight. Microsoft is very well posed for a remote working environment. It's holding up pretty well at the share price around $300, whereas Apple is actually almost recast itself at the highest. But I would point out that neither Microsoft or Apple, as the best performing stocks of the big 5, based on either their 2022 and 2023 earnings profiles or their share price performance, which reflects that, have not returned to their highs. That's the situation we have. We've got a November-December high for both Microsoft and Apple. We've got Microsoft going down harder in a short. Then the covering is played out. And here in Apple, we have a huge short squeeze that came up back to about fair value. So in general, Microsoft is in better value shape than Apple. These are the best 2 of the 2 names. Remember, Apple is actually the largest component of the S&P 500. So this matters a lot. Microsoft is getting more and more important. And you can see it has a really nice profile over the last 5 years, as Apple does, but Apple's profile actually improves dramatically here in the last 2 years when you can see the 2022 and 2023 earnings ramped up. That's their services play. And Apple has a little more modern twist to it because of that. It's kind of becoming more like these other stories we'll talk about, Amazon, Meta, and Google. Now, over here, you can notice Amazon and Meta are suffering over the last year in big cuts to earnings estimate revisions. Amazon in 2022 and 2023, and Facebook, or now I guess you'd call it Meta, in 2022 and 2023. So the forward looks on Amazon and Meta have gotten much more discouraging, and the worst of it is Meta. You can see Meta's share price has plunged with its EPS estimates, and now it's finding some kind of bottom consolidation, hopefully, for this stock. But this was driven by its earnings. This stock is played out. It is in a stage 4 environment, and this is concerning. But we'll find out that Meta later on is actually a very strong income earning stock. It's just a matter of when Zuckerberg wants to recognize that. Amazon, again, you're seeing pullbacks just like Microsoft and Apple, but you get a nice bounce out of this. And I will also point out here you have a number of earnings misses out of this stock. This will be the other traditional thing to learn, is that the way Bezos ran Amazon, he didn't really care about the earnings reports as much as the other companies have. And the market's always discounted that. So we're going to find out earnings don't actually matter as much for Amazon. Google's the 5th one. I want to just point out that its estimates have also rolled over with the stock. and that is leaving it somewhat different than Apple and Microsoft. However, it has had a strong couple years run out of the 2020 to 2021 period. So this was definitely during the surge period of the internet COVID phenomenon. This stock did really well. It's now well off its highs and settling down into a lower place. So if we look at 1, 2, 3, 4, 5, the only stock that's really getting some strength going, I would say Apple, and then second, Amazon, third, Microsoft, fourth, Google, and finally, fifth, Meta. All right, broker recommendations pretty much told that story. The ones that have held up are going to do better for you than ones that haven't. Microsoft and Apple, again, have held up best. Amazon and Meta have done the worst. And Google is sort of somewhere between Microsoft and Apple, I would say. Even, in fact, in trend, probably a little better. So Google actually is holding up a little better from a broker recommendations perspective. All right, this is a great chart. This is going to show you the red lines. They're their industries, and over here is the annual EP earnings growth rate for these industries that they're basically in, and the blue line is the stock themselves. Another fantastic chart. I really like this chart. For example, let's take a Microsoft. We can see Microsoft earnings really ramped up in that 27 to 28 period. This is when they really got the cloud services business running. But in general, it has been a 12% per annual growth rate stock in an industry of 14% for computer software services. Now, if you take Apple, Apple actually has been doing a little over almost 13%, and its industry is around 11. So for a big stock, you have to be impressed with the ability for Apple to outperform on earnings versus its industry. It's not as great as spread, but it's done extremely well. So here you have a repositioning of Microsoft showing up in 2017. Here you just have Apple just outperforming off its equipment period. Is that the right business industry? Again, that's worth talking about. But in general, the 12.7 versus the 11.7, they've got a 10% additional margin over Microsoft. Apple is a very profitable business for as big as it is. Google, down in the basically the same earning growth rate as Microsoft, not any different, but we have a computer software services market growth rate that shows it's actually been outperforming it. So this, again, is exactly the same industry as that, but the stock has done much better. So Alphabet is much stronger growing earnings than Microsoft has been. Microsoft got it turned around in 2017. I think that's when Ballmer left. And they took on the cloud services business. And here you have a story of outperforming that industry for Alphabet, not outperforming it for Microsoft. Over here, Amazon consistently outperforms the non-food retailers. And at 22% growth annually versus 16, this is truly impressive. That's why the stock does so well. Meta platforms, look at this decline. It had been converging for years, but it wasn't until it broke beneath its industry in the last year. You can see the negative estimate revisions here for Meta. And down here, we added one I haven't talked about yet, which is NVIDIA, which is the cloud chip darling that's behind this. They put these chips in, but it's also Bitcoin related. You can see it had a huge, nice outperforming move in the early part of COVID that has since rolled over. So NVIDIA is actually tracking its estimates down, just like Meta. And these are telling you something. Meta and NVIDIA do not have the strength. Over time, these four actually do. So that's another thing we're going to point out. It's not really a set of 6 stories. It's a set of 6 unique stories. Okay, estimate revisions. I just want to point out, this is 2022 over here. This is F2 or 2023 over here. So what you can see here, sometime in about the 29th of July, so we're talking about a month ago, all these estimate revisions got cut for all these companies. This is Microsoft, this is Google, this is Amazon, that's Meta, and that is Apple. So they have been cutting the revisions across the board. This is the recession worry that picked up after the second quarter ended. When we got the data on those 2 negative quarters of earnings or GDP growth, they actually went back and cut the estimates for all these stocks. They also cut them for the next year. but not quite as dramatically. In particular, you can see that Microsoft held up the best. So Microsoft gets the least cuts in earnings in the recession environment. That's the one thing I want to point out here. Okay, let's go time series charts. This is DuPont analysis. Very, very loud chart, noisy chart. I just want to point out again, Microsoft and Apple, like I told you, is going to be the first set. Amazon Meta is the second set, and Google over here. So this is the same way we went through it. What you need to focus on is our operating margins. The operating margin of Microsoft has been very consistent, around 40%. It did that low in the 20s and 30s until 2018 when it got that cloud business going. You can see the operating margin improved dramatically. Here, Apple is a very strong performing company. It really wasn't, by the way, until the iPhone, which comes in at 2008. That's the big story for Apple. And at that point, they've taken it from 22 to 29 and 30 over time by loading up that Apple business. So it really took off with Apple. Here, it really took off with their cloud, or offerings for Microsoft. Over here for Amazon, we got the operating margin very low, 5%, and always has been, even lower. Back in the 2010 to 2015, they were really not making money. Again, 2018 is when they turned that around. That would be the Amazon Web Services where they started to get the operating margin up. Meta, great story here. Notice that we used to get 30% operating margins at 20. Now we're bouncing around, again, down in the low 20s. Still a very strong operating margin business, but not showing any improvement. This business is kind of stagnant. There's really no new business like there was for web services here, and the iPhone here. Over in Google, we see 30% operating margins going to 20. Again, this is sort of showing some deterioration in operating margins. But again, really strong business. I can't say enough about how they run this business. This is a great business. And I would keep it over here, like I said, with Microsoft and Apple. So again, we've got these 5 stories. Microsoft, Apple, and Google are pretty much your strongest. Meta is your worst, and Amazon is in its own way a strong company, but very differently run and in a very different industry. All right, part 2, loads of quantitative shareholder metrics. Let's get through some of this if we can. All right, first off, I've got the trailing 12-month gross margin at the top, net margin here, free cash flow margin here, and the tax rate here. So let's ignore this because the tax rates are basically the same. Let's take a look here. First of all, gross margin. The highest gross margin is always going to be Meta. No matter what you look at, you can say for what you want about this business, but Meta makes a lot of gross margin money. He has to spend a lot back on sales, of course, but if you want a business that has a strong gross margin, that's the one. Net margin. Again, this is the surprise here is Microsoft has taken over Meta. And that happened again in the 2017 period and when Microsoft started to do better. Google and Apple are about the same, and Amazon, as you might imagine, is a very weaker business. But again, in that 2018, 17, 19 period, just like Microsoft is when they put in those web businesses and started doing better. From a free cash flow margin perspective, really interesting. Microsoft is now, again, better than Meta. So that's telling you who's got the strong business here. Microsoft, and that is after you net things out and look at free cash flow margins. That's what I want to tell you here. This is an interesting story to keep in mind. All right, in the balance sheets, we've got the long-term debt to capital at top, debt to equity second, capex to depreciation here, and capex to total assets here. I don't think you can learn a whole lot here other than the long-term debt for Apple's going up. They're basically levering the balance sheet with cheap debt at Apple. That is an interesting story. You can see how they've done that over the time. And you can see actually Google has done just none of that, as well as Meta. There's no debt on these companies. And Apple did take on debt. I think this was the share repurchase play. They just took and they decided their shares were too cheap for this money they could get, and they used their balance sheet to get ahead of themselves. That's the thing you need to understand about Apple from this perspective. Total debt to equity. To be no surprise here, you wrapped up Apple top because you're doing what you're doing, what I said they're doing here. And Meta, again, very little debt. So this is the story about Meta. Zuckerberg has not accumulated any debt. He doesn't want it, he doesn't get it, and he won't try. So that's the only thing you can say that's really bullish here is that Meta has no debt. All right, down here, capex and depreciation. You can see that Zuckerberg, this is the story. Zuckerberg has spent money on capex. He's particularly started doing it in the last 5 years. He has seen that his business is deteriorating. He has tried to ramp up. We know this is the Oculus story. We know this. However, Google's pretty close. And then down here, though, when you do a capex to total assets, interestingly enough, Amazon passes Meta. So Amazon is doing a lot of investing down here. Is it doing too much investing? Did it overinvest? We know that story's out there right now, shutting warehouses. That is showing up right here. Okay, so reinvestment rate at the top, return on capital second, return on tangible equity third, and the free cash flow return on investment here. Again, Apple is leading the way on free cash flow return on investment, taking off with that share repurchasing. Amazon is going down. Divergence here, fascinating story. Do we see this up here in reinvestment rate? Yeah, that's what I'm talking about. This is the amount of share repurchasing that Apple is doing. They really ramped it up the last 2 years. Something to be concerned about. Return on tangible equity, again, I still, at the end of the day, Apple and Microsoft, like I told you with Google, are the 3 best businesses. If you want a metric that holds up with other stuff, it's right here. Apple, Microsoft, Google at the top, Meta and Amazon below it. And you're going to see this here. Return on tangible equity. Same kind of thing. Apple, Microsoft, Google at the top, Meta, Amazon below it. This is a great confirming set of quantitative metrics. Okay, let's get through the price to earnings growth rates. The PEG ratio, the highest, of course, is Amazon. The less is Google. So Meta, for some reason, is very cheap now, but it's not as cheap as Google, which is interesting. Here's a story where if you're just going to be a growth at a reasonable price investor, your stories here are Google. However, price to sales, Microsoft, very pricey. Apple, very pricey. So people are paying up for sales. They're paying up for revenue growth. In the current moment, that is Microsoft, Apple, and then Google in that order. I think that is correct. The basic difference here is Apple's iPhone is 12 years old. Google search has really not been surpassed by anything, and Microsoft is building out a new business on top of its old business 5 years ago. That you can see is ramping itself up, and that's sales growth that people are paying for. Down here, price to free cash flow, can't learn a lot more than we already learned. We're learning that it's Microsoft, and down here, the PE, forward PE. The richer priced ones are the ones that are worth buying. Keep that in mind. You buy growth, not value in this business, even though they're big companies. All right, this is another one we're going to get through. Enterprise value to unlevered free cash flow, enterprise value to sales, and free cash flow to EPS. All this is basically telling you the same thing. Amazon, Apple, and Microsoft and Google are the tops for this mark, and Meta is going to be down at the bottom for these other two. Let's keep moving. Free cash flow yield, earnings yield, net repurchase yield, shareholder yield. More stuff for you to go through. I'm not going to spend a lot of time here today. Currency index. Again, this is fascinating stuff. This is more broad stuff. I've got the major currencies up here. I've got the equity risk premiums coming down here. I've got the earnings per share before non-recurring items. Up here, you can see, for example, Apple really ramping up earnings in the last year and a half. Alphabet doing the same thing, and the share price, of course, following that. So this is a great confirming chart of what we've already learned, but I've added in some currency exposure. You can see that they're also benefiting from a very strong dollar in the international environment. Let's keep going. All right, Zacks Style Scores. Okay, so this is my value score. This is my growth score. This is my momentum. This is my BGM. I want to focus on this one. And I want to point out this goes from 2015 here back to 2022. So who is my strong players in the most recent periods? You can see that I do not get Meta out ahead of itself in the last couple quarters, but it's actually a very strong stock. It's interesting that Meta holds up better than you might think. And this is also true across the board. This is something I'll let you all spend some more time on. It's kind of a noisy chart. I want to keep moving. All right, part 3, the individual the stories of these companies. There is a ton of information here. I really need you to get through it because these are noisy charts. I just want to point out where the narratives are. Number one, Microsoft, best position for remote working. This is the Azure cloud platform. This is Teams. And of course, the Xbox, the 365, the Power Platform, all of this stuff. So read about this narrative and then come over here and study the consensus summary with the company summary. That's how I'm going to run through this quickly. The same is true for Alphabet. Again, strong cloud division with mobile search. And then, of course, down here, autonomous driving, but the litigation issues that this company faces that we haven't talked about that yet. A lot of these companies will face antitrust. So again, compare this to their summary. That's the way to do this. Apple, same thing. Here again, like I told you, it's all about the iPhone. But this services is coming into the iPhone. That's what they're driving on. And they've got other things like the iPad Air and the Mac Studio and the Apple TV in there too. Interesting business they're building on top of the iPhone now. Keep that in mind. On to the Amazon. This is telling you again, AWS, that's Amazon Web Service, AWS. Like I said, this is all about how they built this business around web services. Keep that in mind. So Meta, here's Meta's story. Meta, I have a hard time reading this for you, but again, here what you want to look at is the family of apps, Facebook, Instagram, Messenger, WhatsApp, and then of course, learning some dialogue, daily active people and monthly active people. This is what you want to learn about from this company. All right, so on we go to sales surprises. To finish up here on this sales surprise and then earnings surprise, here at Zacks, we like surprises. It's part of what drives our rank. So we want to point out what's different about these stocks. Number one, Amazon always has a lot of sales surprises. They do miss a lot. So the market discounts that a lot. So keep in mind that Amazon is a sales negative surprise stock and the market doesn't care. Microsoft, look at that 2017 period. It stopped having sales surprises when it hit that cloud business for the last 5 years. You can see back before that this was not a strong stock. Now it is. This is the story of two stories here. Google actually does miss a fair amount. It had a real strong run through this period. It looks like COVID pandemic has played out. You can see those two red ones now. This is what's worrisome. Apple, this is a managed stock. We know about the leverage they're using to keep the share purchasing going, and they continuously meet. So a lot of what you see here at Apple is they're managing it. And Meta, of course, you can see those recent misses and the sales declines here. Very dramatic difference from these two. Look at how different this is. These four are doing extremely well. Microsoft probably best, and Meta is doing worse. So again, this is a great comprehensive star chart. Keep this stuff in hand. Earnings surprises. I'm going to finish up today on this. Earnings surprises are what we really like to like. Again, we get revenue we talked about. Now we're looking to earnings. And again, it's going to go from Apple at the top, which is very, very well managed as we talked about. Meta is next. I have these different order now. You can see they've got those earnings misses here. Then you've got Amazon. It always misses on earnings, just like sales. Keep that in mind. The market discounts that. And then Microsoft, look at that. This is the business that has just changed its dramatic character. And that's what you need to hear. And then Google, of course, actually was in kind of rough shape for a few years here. You can see that. And then they turned the business around. So Google actually has been turning around, much like Microsoft, over the last 5 or 6 years. This is an interesting dynamic. So here, the business that they tried to build up capex, that's not working. The story of Amazon, which is a different management model, a different industry. Story of buybacks, basically, and profitability in Apple. And then, of course, Microsoft and Google, probably the best two position businesses at this point in time. I hope you like this. This is my story of these big 5 tech stocks. If you want to find us on the web or anywhere else, here is the information. Our phone number, 866-794-6065, and strategy pro call at zackspro.com. We're on LinkedIn and Twitter at ZA Tools and Zacks Professional Services. And of course, you can find us on the web at Zacks Pro. Best thing to do on a presentation like this with this much detail, this critical of information, call us, send us an email. That's the way to get a hold of us. We will respond to you and we will give you these slides. That will be helpful to your businesses. This is what we do at Zacks Professional Services. Thanks for attending.